people streaming in. Right. Okay, well, it's 10 o'clock. There are more people streaming in all the time, but we might as well crack on. So good morning, everyone. Very nice to see you all, and welcome once again to our newly named hotel management company, Hospitality Insights. Sorry, I'm still admitting people, so if I drift off, it's not because I've lost interest. Today we've got two guests joining us. First of all, I'm delighted to welcome Thomas Emanuel from STR Global. Thomas is a hotel man through and through, having worked for my old alma mater, Hyatt Hotels, for a number of years in sales. He then joined Deloitte, where he ended up as head of business development before joining STR Global in 2008. And today, Thomas is a director of STR Global, and I'm sure that most of you know STR very well, either as clients of or just by association. But for those of you that don't know STR, it is probably the world's leading aggregator of hotel data, working alongside, but in competition with Hotstats, but collecting data in a slightly different format, but probably with a stronger global presence. So today I'm hoping that Thomas is going to really give us a context of the COVID impact on a global basis, but also then look at the UK market and how it's performing and how it's reacting to the impact of the virus. So I think without further ado, if I could hand you the floor, Thomas. Thomas is going to take us through a presentation, and please drop any questions you've got into the chat box, and I will pose those to Thomas once he's finished his presentation. And we're also then going to be welcoming Mark Crothall, who's actually literally just coming online, who's going to give us an update as to what's happening north of the border, particularly in relation to the report back from the recent task force work. But without further ado, Thomas, the floor is yours. Please tell us what's happening out there.
Thank you very much indeed, Roddy. Good morning, ladies and gentlemen. I will just now share my screen and pop that into presentation mode. Does that look okay? If I can just get a thumbs up. Yeah,
it does now. It is now in presentation mode.
Wonderful, thank you. Well, thanks very much indeed, Roddy, for the invite. Lovely to join you all today. And as Roddy said, I'll take you through some data, some analysis on the hotel industry. And these are some of the questions that we want to answer today. So there's quite a lot, as you can see, that I'm hoping to get through and be able to comment upon. But broadly speaking, they're divided into three buckets. So we've got the global picture, which is what we'll start with, before we drill down and have a look at the UK in a little bit more detail. And then I've got a few slides at the end to talk a little bit more about the future. But let's start with the global scenario. And we're going to start with a chart that shows rolling 7-day occupancy. Firstly, for China, which we can see here since the beginning of the year, fell early, but has subsequently recovered, albeit with a few ups and downs, to a pretty respectable level of occupancy. And then we'll bring in the other markets. So we'll bring in Europe, the States, and the UK. And we can see actually those three markets all fell, relatively speaking, at the same time. The UK and Europe fell a little bit deeper than the States. The US has now stabilized really since the beginning of July at around the 50% occupancy mark. So not really much movement happening stateside in terms of performance. But you can see in both Europe and the UK, once we started to move into summer, we saw that upward trend in terms of occupancy before things have again fallen back a little bit more, which again, of course, I'll comment upon in more detail. Of course, the one thing that is obviously on all our minds that isn't reflected in this data, although the data goes up to last week, is the impending national or well, English lockdown, I should say. Obviously different levels in Scotland, Wales entering a little bit earlier, as did Northern Ireland. But ultimately, we're not yet reflective of that, but of course, I'll comment upon it as we move through the deck. But it's not just, of course, these 4 markets that are challenged at the moment. This is a truly global pandemic. And when we look at occupancy up until the end of last week, what we can see here is every dot represents a submarket for STR, and the color of that dot represents the occupancy bucket that it currently falls into. So you can see well over 50% of submarkets globally are still at less than 50% occupancy as of last week. A lot of those that are sub 25%, as you can see, are centered here in Europe. We do see some across Northern Africa, across India, Southeast Asia as well, but Europe does appear to be the epicenter of those markets performing at the lowest level per se. There are some bright spots, the Western United States, China, Japan, Australia, New Zealand, and also parts of the UK still, which we will again comment upon further. And I think just that dark green dot at the very tip representing Devon and Cornwall, which is a story that again I'll touch upon more momentarily. But that's the position really we found ourselves in last week. And I think one of the questions that we want to try and ask is what's going to drive that demand back into hotels? And I think this is quite a nice chart to showcase that. And really what we saw, if we start at the bottom of the chart, presuming there is no lockdown, what we need is hotels open. And if we get hotels open, we will see domestic leisure demand. And we saw that across the summer. And again, I'll talk about that more in a moment. In order for short haul international leisure to really come back, of course, we need borders open. We need quarantine restrictions lifted. And if we then want to see the corporate market return, which it hasn't done at all as of yet, for domestic business to return, we need businesses to start to behave normally. We need to be back in the office, of course. I'm at home. I'm sure most of you are at home at the moment as well. And then as we get further down the line, we do believe for long haul international leisure and corporate demand to return, really, we do need that vaccination or cure to be forthcoming. And then finally, the last sector we expect to recover to be the group sector. And a lot of that, of course, is going to depend on the economic impact, the economic recovery, as and when we get there. The one thing I think to also remember when we look at this chart is the fluctuations that will occur. If we just think about the UK, initially, we were told to work from home, then we were told to go back to the office if we could, then we were told to work from home if we could, and now we're being told we have to work from home. So there are going to be fluctuations along the way. It's not going to be a straight pathway, but widely speaking, this is what we think we need to happen to see those various demand drivers return. As I mentioned, of course, corporate and group are the last that we think are going to come back in many ways. And if we look at the global performance of some of our key global gateway cities, last week again, you can see that cities are for the most part still really struggling. A number of them below even 20%, particularly here in Europe. But again, there are some bright spots, and one of the brightest spots again is China, as you can see there in Beijing and Shanghai. And I just want to touch upon that a little bit more, because I do think it's important to look at, especially as we face more restrictions here in the UK, is to look at a good news story per se. And if we see China here, we've got mainland China, then we've got the tier 1 cities, and then those other cities. And we can see really over the last few weeks, albeit with a few fluctuations here and there relating to mainly public holidays, particularly mainland China and other cities are pretty much back to where we were this time last year. Tier 1 cities lagging a bit more behind, but they're far more reliant, of course, on international visitation. So that makes sense. China is a domestic market, but at the same point in time, it does show if the virus can be contained, we will see demand return. And that certainly, China is the benchmark, what we need to look to at the moment. And this kind of containment of the virus enabled one of my colleagues in our Beijing office to attend a 1,000-person wedding in Qingdao back in August. And obviously, that's what we want to get towards. That's what we want to emulate in the not too distant. So I think it's good to look to China at the moment to see actually things can be contained. Certain levels of normality from a hotel perspective will return. But let's now come closer to home and have a look at the UK. And before we start talking all things COVID, because of course that's what I'm here to do really, I thought it'd be nice to just let's look back to before the pandemic hit and think about where we were as a UK hospitality industry moving into 2020. And the fact of the matter is it was in a pretty good place. This is a long-term supply, demand and RevPAR percentage change chart. And we can see there demand and RevPAR had grown for the last 10 years, every year. And that's cumulative growth. So it's growth upon growth upon growth. So it was a very positive story ultimately. And RevPAR had continued to grow despite the supply ticking up, as you can see, particularly over the last few years. And I do believe quite firmly that if the pandemic hadn't happened, ultimately we'd be looking and talking about 2020 as the year of supply growth and what a challenge that would be for the industry. But as we came into this year, things were looking pretty decent. And if we look back again to 2019 and our key cities, we can see some very strong levels of occupancy, but particularly that's the case in some of the regional markets. And when you compare the UK in normal times to international comparisons, again, you can see very clearly that the UK does usually in normal times, as I say, compare very favorably, particularly from an occupancy perspective. It's a very strong graph, this. But of course, we need to talk about COVID, and we've had downturns, of course, over the years, but none quite like this, as we know. And one of the main differences between this and previous downturns was the closures. And this chart showcases the percentage of rooms that were closed during the pandemic that report data to STR. But because of our extremely strong sample across the UK, this is really a proxy for full supply. And you can see that during the height of the pandemic back in April, about 90% of all rooms reporting data to STR were closed. Very significant, and it only really started to tail off significantly post July the 4th, of course, which was the date that we could reopen. And if we split that between London and then the rest of the country, you can see slightly more hotel rooms closed across regional UK than in the capital, but the rooms took a lot longer to reopen in the capital than it did across the regions. And even as we stand today, we're still looking at around 10% of rooms being closed. So that's a significant number of rooms if we think about it. And of course, one of the big questions that we are going to be answering as and when we can is how many of these rooms, how many of these hotels again decide to close their doors with the impending lockdown, certainly across England. And the question is, I think, made more tricky in a way, because initially it's a month-long lockdown. It may last longer, as we've been told. So will hotels shut and reopen for that period of time, or will they just simply cut back on rotas and staff and so forth? The question remains, needs to be answered, and it's something that certainly we will track at STR along with the reopening rate. But what has the pandemic done in terms of performance? Well, obviously it's been tricky. So this is UK occupancy back to the beginning of the year, and we can see naturally it fell very sharply as we moved into that first lockdown, bottomed out just after lockdown at 12% before hovering around the 25% mark up until the point that hotels could reopen at the beginning of July. We then saw something of a recovery, shall we say, a bit of a summer surge, which again I'll focus on more momentarily, peaking for the bank holiday weekend before again falling back. And of course, we expect to see that tumble very significantly as we move into November. The one thing to mention on this chart is this is for hotels that were still open and reporting data to STR. So if you actually look at full supply and count those hotels that were closed, really occupancy bottomed out at the 3% level at the very depths of the pandemic. So certainly incredibly challenging. But it's not just occupancy. Rate has also been challenged quite significantly. You can see again, it was falling quite dramatically week upon week. This is obviously again only for hotels that were open and reporting, but we've now sort of bottomed out at around the 30% average rates below where we were in 2019. So still very, very significant. But if we look back at the period of time since we went really into that first lockdown, and we look at week upon week occupancy change. So this is the performance change from the prior week. And really we can divide things into 4 buckets, although there will be a need for a 5th very soon. The first one is obviously lockdown. When we were locked down, not a lot was happening, of course. Then we saw a bit of a summer surge. Once the hotels could reopen, we saw domestic demand return. And then we saw that summer stabilization as well for the rest of the school holidays effectively. But then the schools went back. The weather started to turn a little bit autumnal. The leisure demand weakened a little bit. So we've seen a subsequent falling back and a stalling of autumn, really. That 5th bucket, of course, is going to be November, and how we then perform once we go back into more of a full lockdown per se. But the summer surge has been one of the interesting stories, of course, since the beginning of this pandemic. And if we look at just the month of August, wanted to see whether it was our cities that benefited from this, effectively what became the summer of the staycation, and not really. Obviously, some performed a little bit better. You've got some outliers there. Plymouth, Inverness performed very nicely, but still a number of cities below the 40% occupancy mark for the month of August. You can see there Glasgow, Manchester, Birmingham, London, and Dublin over the Irish Sea as well. So it wasn't really the cities that benefited, it was the coast and the country. And this again is for the month of August, and we can see all of the markets on this chart had occupancy north of 70%. And if you look at Dorset regional, Bournemouth, Devon and Cornwall regional, and Plymouth, it was north of 85%. So it really was quite a positive summer season, really, for our coast and country destinations. But the question then, of course, arises is what happens next? What came after summer? Well, interestingly, moving up until, again, last week, we can see actually that trend very much continued. I've taken some of the key coast and country markets and compared that to some of our key cities, and we can see here occupancy, with the exception of Bristol, was really very much still centered on the coast and country. And you can see there north of 70% in the Lake District, Cornwall, Devon and Dorset, which is really very strong when you consider, yes, okay, it was the half-term holidays, but obviously still benefiting from the fact people aren't traveling overseas. Blackpool obviously is the anomaly there, but with the Northwest being in tier 3, that's not surprising to see. But again, another thing to focus upon, usually it's our cities that really benefit from having stronger average rates, but actually it's now the country, coast and country markets that are actually able to demand a higher level of average rate. It's the basics, obviously, demand and supply, but that is another shift that we've seen as a result of the pandemic. But of course, we've been under these local lockdowns. This is just a map of England. I apologise. I know obviously Scotland, Wales, Northern Ireland also under various levels of lockdown as well. But what I wanted to focus upon is those lockdowns. And there have been a number of localized lockdowns, of course, and how those have impacted performance. And here we've got, you can see Leicester, which was the first market in the UK to go into a local lockdown. Seems like a long time ago now, back in June. And you can see there immediately there was a decline in performance in Leicester. Similarly, when Manchester went into a local lockdown, then we saw that in Aberdeen, in Newcastle, and then more recently, of course, in Liverpool, as well as in South Wales, across both Cardiff and Swansea. So when we look at these, the ones that happened earlier on, with the exception of Manchester, it was taken about 6 weeks for those cities to recover the loss of occupancy, which was around up to the 10 percentage point mark. So localized lockdowns absolutely had an effect. Not as much, of course, as a national lockdown, but the position that the government was taking was certainly impacting hotels in those markets. But let's now look at the future and business on the books for our major cities. And this is business on the books for the next 90 days as of last week. And there's no getting away from the fact it's pretty bleak. The amount of business on the books is not strong. Where we do have those peaks is undoubtedly it's weekend business. You can see all of those peaks. That's all Friday and Saturday nights. Edinburgh performing significantly better than other markets, but ultimately it's still significantly behind, 50% at least behind where we'd expect things to be. But the interesting thing is when we look at then the pickup. So this pickup from last week on the prior week. And up until last week, really, we were talking about positive pickup. But we're now starting to see, particularly in Edinburgh, with the restrictions being brought in, we're starting to see negative pickup. I expect to see that exacerbate with the wider lockdown impending. So over the lockdown period, we saw cancellations outweighing new bookings. That will happen, I'm sure, in November. And if this presentation was taking place this time next week, I'm sure we'd see far greater negative pickup than we're seeing here. The other story, of course, is looking at the short-term booking windows. People are not planning in advance, as you would expect. And really, it's for the next week. People are booking less than a week out for the majority of stays at the moment. And you can see it drops off very dramatically after the first week or so. So expect to see that obviously continue, but also expect to see us back in a negative pickup position, which is something we haven't seen since July, really, obviously, as we are now going back into greater restrictions. So thinking about the future again, and our forecast, STR forecast performance with our friends at Tourism Economics. We do this on a quarterly basis, and this is actually our forecast from August. We will be reforecasting in November, but I think it still gives you a pretty good indication of where we think things will be. So obviously significant declines for both London and regional UK, and this is on last year. And those declines, I think, might actually be stronger now because of what we're likely to be facing, or what we will face in November and potentially in December as well. But as we bottom out in 2020, we do expect to see something of a recovery. And if you look at those percentages, it looks pretty healthy, right? But actually, it's somewhat misleading. What we need to be looking at is where 2021 sits in comparison to 2019. So our latest forecast, which, as I mentioned, will be amended in the coming month, 2021 was still 30% behind 2019 across regional UK. London. So still a long way behind the peaks of last year. And the other thing I think to note on this chart is this goes out 5 years, and we are still at the moment not forecasting 2019 level again by the end of 2024. So we're in for the long ride. I think we're all fully aware of that, but that's currently what our forecast is saying. Just moving forward to the question that I think is on most people's lips, obviously with the second lockdown now imminent, we wanted to compare where we were last year with this year. As you can see, in the first lockdown, occupancy declined 65 percentage points, 88% change year on year. So it would be hard to imagine things will be any different this time around. So we think that's where we will be heading in November. So unfortunately, pretty bleak. But I don't want this to all be doom and gloom. And one of the questions that I think, again, we wanted to answer and ask ourselves is long-term, will travel and tourism recover? And we do believe that the answer is yes. people still want to travel, people still want to experience. And as we can see, as we looked to China, it came back. I know we're all here on this call. We've been on many of these kind of webinars over recent months, and they've done a great job. They've kept us informed, they've kept us engaged. But I think all of us would agree we'd far rather be physically present at a conference, meeting each other, networking, learning from one another. So we do think things will recover, but it will be a long road. So in conclusion, as it says, we must keep faith, I think, but also face the reality. And what we know at the moment, the virus is obviously still amongst us, and controls on people's movement is going to be a factor on how the hotel industry can perform. There's some fairly limited business on the books, but of course that hasn't been fully, the impact of the second lockdown hasn't yet fully been felt. As I mentioned earlier, we think corporate will return, but international group is going to take longer. We really need that cure in place. Hotels have reopened, but again, the question, how many will close again? What we don't know is how bad this winter is going to be. Obviously, there are some pretty awful looking forecasts from the scientists out there. Hopefully that second lockdown will limit that, but could it be extended if we open up again? How long before cases rise? These are all questions we're obviously all asking ourselves and don't know the answer to, as long as the biggest question probably, which is vaccine, and then what the real fallout economically will be. So what we can expect really is that China, best case scenario, really, that's what we need to look for. We think elsewhere, any recovery that does happen, as you saw in the States, for example, at the beginning of the presentation, any recovery that does happen is likely to stall until we find that vaccine or cure. But we do, as I mentioned, we don't think travel has been irreparably damaged. But to get back to 2019 levels, it's going to be a long road ahead. And we think for most markets, that won't be the case until 2024. So sadly, generally a pretty bleak picture, but I'm sure that was what you were all expecting. But I certainly hope that was of interest. And I'll say thank you very much indeed for your time, and stop sharing my screen. Roddy, it's back to you.
Thank you very much, Thomas. Very straightforward, very insightful, and very scary, really. But thank you very much indeed for sharing that information with us. As you say, it's a bit of a gloomy picture, but actually I did hear one tiny little bit of good news yesterday, which was that yesterday was the first day that Australia didn't report a single COVID case, which is quite an achievement. Is there any evidence? I mean, I did see your blob map, or whatever you refer to it as, and one can see that hotels, some hotels, at least in Australia, are obviously, or some areas of Australia are obviously doing reasonably well. Is there evidence of a market recovering there because they're in a better position than us?
Yes, I would think so. And where you see the markets not performing quite so well in Australia it's around, I think, Victoria, which has had more of a challenge, in Melbourne and so forth. But yes, absolutely. I think, you know, the states have had various levels of restriction. But I was actually talking to my colleague in Australia this morning, and he was talking about how Aussie rules football as, you know, having 25,000 people in a stadium and so forth. So we are starting to see things returning to normal. You know, they're not masks, restaurants are open as normal. So yes, absolutely. And there's a clear correlation between, you know, any world that has managed to contain the virus and the hotel performance. And I think, as I mentioned on a number of occasions, of course, China, but Australia and New Zealand doing very well. Obviously, that is all still domestic, so there is a big portion of demand that is missing. So you can kind of see as well as those states which are not taking COVID as seriously, shall we say, as others, are again doing better. So there is very much a clear correlation between the state of play from a COVID perspective and the hotel performance, undoubtedly. But Australia's, yeah, it's looking, all things considered. But I do believe as well, still no international flights.
No. Okay. Well, thank you for that. So I think you're just breaking up a little bit there, but I think we got the end of that. Another question for you, Thomas. Having watched a number of your STR webinars presented by Robin Rossman a few months back, well, and more recently, you were forecasting a much more rapid recovery. I think it's probably fair to say that your recovery has moved out at least 2 years from what you were originally forecasting. Is that fair? And if that is the case, what are the key factors that have led you to change your views as to how quickly the industry can bounce back?
So I think we reforecast every quarter. So originally, when we were doing the webinars, and by the way, I encourage you all to join. There is one on Friday morning, so please do join that. But the first one was May, so we were only 2 months into this, and I think, you know, at that point in time, we were probably, along with the rest of the world, I think, to an extent, sort of thinking this was, you know, a couple of months, knuckle down, and then things will start getting back to normal. By August, I think we understood that actually this was a far more challenging situation, and it wasn't going to dissipate, and we expected second waves and so forth. So obviously with the forecast, it's always changing. So I think it's kind of the understanding of the virus, but then I think as well we've subsequently seen, you know, I've kind of been using the term the travel ecosystem. You know, it's just been shaken to its very core, and it's going to take years for flight schedules to get back to where they were, which is going to significantly impact performance. And then I think as well, we don't know fully, but the full economic fallout is obviously going to be challenging. So even if people can travel, are they going to have the disposable income to do it? Are corporates going to be putting people on the road quickly again? I think there's some argument for it, of course, but others maybe not so. So I think it's an evolving picture, and we do our best to update as and when we see that. And November again will be likely a slightly different scenario, but I don't think we're going to be forecasting a further delay in recovery per se come November.
Thanks, Thomas. Thomas, one of the sort of brighter spots in the data you shared with us was obviously the performance of the coastal hotels or coastal areas and coastal cities, particularly during the summer months. Just as a matter of interest, how did their performance compare with their performance last year? I mean, they were up in the sort of 70s, 80s, and 90s. Was that equivalent to last year? Were they ahead of last year because of the stronger staycation market, or were they a bit behind last year? Do you know?
I don't have that data to hand, but I think I would say pretty much in line with last year. I think potentially next year will be interesting because I think if we can travel, there's going to be a lot of pent-up demand there. So I think actually next year might be a little bit more challenging in some ways for these coast and country markets who won't have the captive market that they had this year. Obviously the summer is usually the peak. I think what's been interesting for me is as we've moved into the autumn, actually, I know I showed you the half-term week, but that hasn't been unusual over sort of October. So to see sort of mid-October occupancies in the late 70s for these coast and country markets has been unusual, shall we say, because usually they would fall back down far more quickly. But people still want to get away and have got built up holiday to use and so forth. So there is still that desire to have a change of the four walls you're used to, you know.
In other words, the season has the sort of traditional season has extended somewhat.
I perfectly put, yes.
Okay, good. Stuart Broster is asking the question, what is the percentage of hotels that are not submitting data? And are these geographically measured? And does this affect the data? I'm assuming what he's asking is what's the percentage of hotels that are signed up to STR that are not submitting data? I don't know, Stuart, you're obviously on the call. Would you like to unmute yourself and perhaps put the question yourself? Because I'm not sure if I've grasped the point which you're trying to make.
Yeah, Roddy, I mean, it was actually, as you described it, I wanted to know those that submit, who are not submitting, and is that geographically measured around, is there a pattern to the ones that are not submitting? And is that rolled into the data, and does it affect the results that were presented today?
Thanks, Stuart. So in terms of across the UK, it's around the 68% of all rooms across the country submit data to STR. So it's a very representative sample. In terms of where they are, I mean, they're right across the country, as you saw from the presentation. I would say, though, we do have a stronger sample in towns and cities, candidly. Where we are still building participation would be more focused around those coast and country markets, but we also wouldn't present something if we weren't, you know, comfortable with the robustness of the samples. So we don't weight the data, which I think might have been another sort of angle to your question. So it is literally looking at the performance of those hotels that are open and submitting data to STR. Does that answer your question?
Yeah, no, it was more around how many have not submitted it. So, for example, if they've been closed, I'm guessing they're not submitting data.
Oh, yes, absolutely.
Your sample set, you know, of your sample set being 68% penetration, which you defined just recently, and I know that's geographically biased. Who are not submitting data, and did you factor that in? So what I'm trying to say is if they're not submitting the data and they're closed and the occupancy is 0, then that's obviously going to.
Oh, right. Okay. Yes. Sorry. So basically, what you saw in the presentation was those hotels that were open and submitting data to STR. We saw, as I presented in that chart, it was around the 90% of hotels were closed. So it was a small sample for that lockdown period, but ultimately that was the performance of those hotels that were open and reporting. If we look at total supply, then of course occupancies during that period where a lot of hotels were closed would be far smaller, what we'd call total inventory reporting. And if that's something of interest, Stuart, you know, if you want to follow up with me, we can certainly provide some more transparency on that. But if you look at where total reporting occupancy got down to, it was about the 3% mark during the height of the lockdown, if you factor in the demand that went into hotels and look at the total supply as the basis, as opposed to just those that were open and reporting.
Thank you very much, Thomas. Thomas, thank you very much for sparing the time to join us. Please do stay with us because there may well be other odd questions which will come up. But I'm going to move now, if I may, to Mark Crothall, who is the Chief Executive CEO of the Scottish Tourism Alliance. Mark, as I'm sure many of you know, is a regular attender and a regular contributor to these sessions. I thought it particularly pertinent to ask Mark if he could give us a bit of an update as to what his view is of what's going on north of the border, what may be likely to happen north of the border, whether there are other restrictions, and perhaps to give us a bit of a headline in terms of the report from the recent task force which has come in. So without further ado, Mark, throw the baton to you. There's some fair amount to cover off there, but be very interested to hear what you've got to report.
Thank you, Roddy. I've got a private message in from Paul Wilson. Did I get any sleep at the weekend? What a weekend! And I think probably it's not just been what a weekend. It's what a last few 72 hours, and obviously even this morning it continues to rumble on with the implications of furlough, not furlough. Obviously the introduction of the tier system in Scotland, and the unknowns of do I, don't I take an early lockdown, chase the cash, etc., etc. So I suppose the immediate sort of update feedback, and I've had lots of phone calls from businesses over the last 36 hours in particular, and have been on a number of other calls. A very interesting call yesterday, which was chaired by Philip Grant, who's the COO of Lloyds and heads up Scottish Financial Enterprise as chair, with colleagues from CBI, SCDI, and Chambers of Commerce, etc. And Dan Bristow from the Torridon was on the call. The whole tier decision piece certainly has engaged the industry in a lot more dialogue up front before arriving. The government have engaged with the industry a lot more up front before arriving at the decisions that were reached. I'm not saying that the decisions that were reached were necessarily the ones the industry wanted, but there is now a much more committed approach to having those discussions. And only last night, we got a call yesterday, late afternoon, from the senior civil servant in Scottish Government to speak with the business organisations that come together on a call on a Wednesday. As I say, those CBI, IOD, FSB, ourselves, Scotland Food and Drink, to give a view and a thought as to what the First Minister had said at lunchtime and the implications of furlough. But it appears from what's unfolding is that, you know, anybody who is in any tier, whether you're in tier 1 or tier 4, everyone is suffering a consequence. And Dan Bristow yesterday from the Torridon said he might as well be closed, even though he can actually now pretty much afford to offer up everything in terms of serving alcohol and being pretty much not quite normal, because all his client base come from tier 3, which is obviously the Central Belt. Fiona Campbell, who spoke on the call last week, reported in the self-catering sector in the space of 24 hours, coupled with the tier announcement and obviously Johnson's announcement as well. The Super Control platform that drives most of the self-catering, or one of the main platforms that drives self-catering accommodation, had 1,000 cancellations in the space of 24 hours. Spoke to Linda Johnson this morning, first thing. Auchrani saw 4/5 of their accommodation drop over the weekend. Stephen Leckie, again, lowest occupancy level he's ever had. Again, largely driven by the fact that people aren't able to travel in or without the tier areas. And with that, of course, the supply chain is being heavily impacted as well. So it still doesn't bring any real benefit. Some are having a bit of luck, but it's not going to be a solution or enough to get businesses through what's needed. There was a lot of concern, particularly from the hospitality pub sector, where pubs were placed into tier 3 and obviously given the opportunity to trade until 6 o'clock. A wet-led pub, but food only, no alcohol. So a wet-led pub, that doesn't really present much of an option. So there was then the discussions around, would they be able to access the job support scheme, the open one, or the closed one, should I say. That's obviously now been sort of superseded by furlough. We heard yesterday that a number of visitor attractions have taken the furlough option, the Royal Yacht Britannia being one, closing now and taking that as an opportunity, because the viability of footfall, because of travel restrictions again is really not making it cost effective to stay open. And again, a sort of straw poll of some of the businesses I've spoken to. A friend of mine has a portfolio of pubs across Edinburgh and Glasgow. He'd take lockdown straight away. I was on again with the Glasgow Restaurants Association this morning. All on the call would take lockdown straight away, but the larger the business, of course, where you've got the bigger overhead, the grants being so small by proportion to the fixed costs, then they would prefer to stay open. So the ask of business associations yesterday was to give a view on what we should do, and again that spanned, you know, retail to all sectors. And given that we're at day 1 or yesterday was of the new tier structure, it seemed, and we're all talking about following the science, it would seem a wrong move to go straight into a lockdown and chase the cash, and that was the consensus by all on the call. But that said, you know, I still think we've got a real challenge in confidence, because the consumer confidence is waning with the uncertainties of can I, can't I, not sure where you can travel, let alone obviously the concerns around potential virus transmission. And the business confidence, I've never really come across such a time since we've launched, come into this pandemic, where the mental state of the industry is as low as it is. It's almost if it's gone into a different gear change in the last 10 days or so, which is deeply concerning. So I suppose that is the question, and you know, I've given you Dan's sort of recounting of Corridon, and then David Ibbotson down in Dumfries and Galloway, sandwiched between the north of England, which is now shut, and obviously Ayrshire and the Central Belt, which is closed, and yet they're in an area where they could open. So the businesses themselves, because it's not legality, a legal requirement, it's guidance only, are faced with this dilemma where they're desperate to probably trade and take money, but obviously are being asked, as are all the population, to observe the restrictions or the asks of not travel. So a challenge, and the government officials last night asked around compliance as well, which was really, really difficult to take on board. So that is the quandary, and I think you know, that's still being debated. Listening to Kate Forbes this morning, there's still not 100% guarantee that unless things have changed in the last couple of hours, that furlough would be extended to the devolved nations beyond the end of November, should it be required. So the jury's out on that one, and that no doubt will play into the thoughts of the First Minister and where they want to go. But you still have a good part of the industry saying we'll stay put. The cities, as Thomas has sort of outlined, remain absolutely on their knees in terms of footfall. We're a year away today from COP in Glasgow, which sort of begs the question as to whether that event is really going to be able to go ahead. It's certainly a signature event that the Scottish Government will want to make sure happens, and I think we would all love to see it happen. It will restore some confidence, not just for the industry, but I think the country as a whole. But the reality of that happening as we look at the outlook is very questionable. And you know, that's also then based on the survival of some of those assets. Will we be able to accommodate the number of the number of delegates, etc., that are due to attend? In the last week, we've also had some positive news where there's been some grants being made available to the nighttime economy operators, the clubs, etc. So there's some grant support there. There's another events fund that's opened up. We have a strong representation going into the Scottish Government, which we've submitted around the importance of protecting the travel trade, the DMCs, and you know, articulating the volume of revenue that they generate between them, which is about 100 million. So we had a cross-representation of businesses who are members of UK Inbound, SDMA, SIGTOA, the Golf Tourism Operator Association, and to present a case for some funding to protect that particular community of businesses, just their overheads over the coming 9 months, because they will ultimately fill a lot of the hotels up and down the country. We still are waiting on, I think about 4 million of the 48 million of the grant support that's been made available has only been distributed at the moment. So there's a bit of time getting that out into the system, and the hotel support fund that has been obviously talked about in the past is only a 14 million pot, but it's a small amount, and that's still to be paid out. There's a bit of work going on there. I think Malcolm Buchanan had also highlighted when he was on, you know, the amount of exposure the banks have got as well, and that has been brought into the conversation now around future decision making on tiers and things. So there's lots and lots of stuff still up in the air, as you'd expect, but I think confidence is one thing. It's very much one that gives us great concern. I think the point is well made around, you know, the coastal properties have done reasonably okay, but again, that's probably been a bit scuppered now with the travel piece of the Central Belt being the predominant likely visitors that they would get over the coming weeks in the lead up to Christmas, and people are now very much uncertain as to what they can and can't do in the weeks ahead. We have the assurance around the tiers from the discussions that have been had of UK Hospitality, Licensed Trade Association, Scottish Beer and Pub Association, and Steve Montgomery, who's the spokesperson for the Scottish Hospitality Group, representing a handful of businesses. Been really good dialogue with the government, and put forward some strong recommendations around how we could perhaps mitigate some of the restrictions being imposed on the various businesses at the various tiers that have been presented. They've been listened to well, and I think might be open to flex over the coming weeks, but it will require a bit more work to be done by the business. There's roughly £80 million being spent by hospitality businesses in Scotland conforming to put in COVID measures. So that's a huge amount of investment already made. And of course, that case is being made very strongly that we are a safe environment to come into. So lots up in the air, but the recovery plan that you referred to earlier, we published that last Friday. It was important that we got it out. It flowed through as part of a four-stage process that STIRG, the emergency response group, had started out. The first stage being the response bit to get those early grants in and gather in the data and to see where we were, and then a bit about the reset, and then to restart, and then this final stage of recovery. We asked the Scottish Government to establish a task force back in June, beginning of June, as a recommendation, and the task force came together in July. It was comprised of about 40 representative bodies chaired by Fergus Ewing and Jamie Hepburn, the Business Skills Minister, and the makeup of industry from across all sectors of the tourism body, from say travel trade to food and drink. James Ware, Lucia Husband, Scotland Food and Drink, airports, say hospitality, represented through a number of channels, both private individual operators, again, different geographies. We had David Sutherland from the North Highland area, Angela Vickers, also representing Hit Scotland, and then some smaller property owners, visitor attractions. We also had two representatives of the unions on the group as well, local authorities. And the work streams that fell out underneath the recovery plan were one, to stimulate demand. And what do we need to do to drive demand over the next 2 years? One was to look at the investment requirements around how do we work with and manage the level of debt that has been taken on by business, but also to free that up to enable capital to flow and allow that investment into future infrastructure and obviously businesses to invest. But importantly, and that was led by Malcolm Buchanan, and the third work stream was around business recovery. And also workforce recovery, workforce resilience and protection. And I led that work stream with predominantly the guys from the trade bodies who sit on our industry council. But we talk about recovery, we're still very much in the rescue place. And as the things change almost from week to week, we probably haven't moved much further away from rescue in terms of priorities for action. But that said, the plan itself and the recommendations in it are designed to be a sort of a 2-year segue to take us back on track into what is Scotland's tourism strategy that was launched back in March. And that strategy has 4 key priority areas. One is around people, our employees. One is around place, our destinations. One is around businesses and business resilience, sustainability, and innovation. And the fourth one is around experience, but all through the lens of sustainability and how can we green our tourism offering and make ourselves more attractive, but the world leader in doing certain aspects of tourism and delivering it better than anyone else. So we also undertook a number of scenario planning exercises and with academics and professional bodies to do a COVID overlay of the strategy itself to make sure it was still fit for purpose, considered it was. but we're still back to the immediate actions. And those immediate actions for Scottish Government and UK Government are very clear. One is very much about working with the sector and planning appropriate-based evidence, or appropriate evidence-based restrictions, and obviously with that providing proportionate fair financial compensation. Two, to continue to look at the amount of targeted support available to tourism, hospitality, and other businesses, especially those who've not also been able to open. Support the workplace, the skills development program. We're still waiting on a confirmation, hopefully, of an extended business rates holiday for a further year, having that right marketing, and then looking at the testing regime, really accelerating that change too, so we can start to facilitate and drive international travel. And the deferral of the golf market, for example, a lot of the Americans, we're being told, are now deferring through into 23, 24. For a UK government, again, it's initially where we started out was to provide that support package for a job support scheme. We've obviously got the furlough scheme now. This commitment to this longer term VAT reduction for hospitality beyond March 21, and look at other taxation measures that really could flow through to support the sector as a whole. And don't introduce idiotic policy things such as like the policy to abolish duty-free taxation. We need to make the sector as competitive as possible. So there's a lot in the report. There's a very clear set of asks for both Scottish and UK government and business as well. And the aim is to get together a summit of ministers. It's been shared with a number of the leaders of opposition parties, as well as UK MPs. And Fergus Ewing, together with the task forces as a whole, are committing to take that forward. So that's a very sort of headline, fast-paced overview of what's on. I could talk for hours, but it's a moving feast, as you know.
Mark, just a couple of quick questions which have come in. One is, do you have any indication, I may have missed it in what you've just said, but do you have any indication whether there is likely to be a further lockdown in Scotland?
We don't have any guarantee, of course, but I mean, I think the First Minister's obviously given some strong indicators that there may well be a preference, or there is a preference to maybe look to do a short lockdown before Christmas. I think the sort of chat amongst those of us I mix with would be that it might be a couple of weeks in December would be the preference, to do early December and then give us a clear run at Christmas. But I wouldn't take it off the cards, and whether it's across the whole country or whether the Central Belt only.
And is there any indication? I mean, I'm in the sort of Central Belt tier, whatever we are. I'm so confused about it myself. I've no idea what tier I'm in. But when are the tiers to be reviewed next? Do you know? So
there's a weekly review of the tiers against the science and against hospital capacity and all of that modelling. What we have been told is that it's very unlikely if you're in a tier 3 that you would come out of that tier for at least 2 to 3, if not 4 weeks. You could well potentially go from a 1 to 2 or possibly 2 to 1, but the higher tiers you are, the less chance you are of moving in a 2 to 3 week time.
Okay, thank you for that. I'd like to just go to Tanya Lister briefly up on the West Coast, because Tanya's been something of a spokesperson for hotels up in the Highlands. And I know that Tanya, you've had probably somewhat different experiences to some of those outlined by Mark, but would you like to just drop in and give us your view?
Yes, good morning. Thanks for the opportunity just to sort of put in, I guess, our thoughts on the matter. Appreciate we're sort of a very small hotel and not necessarily representative of what's happening across the country, but actually, I have to say, I'm really concerned that there are, it's not surprised that there are hotels that feel that they would rather be in full lockdown and receiving furlough right now than trying to stay open. Obviously, one of the big problems is our sort of ever shrinking guest base at the moment in terms of comfort. We're in a different situation entirely, Mark, here. So, our occupancy for November is currently at about 77%. Our occupancy for this week is forecast at 86%. And I would expect us, roughly speaking, probably if we can continue to stay open, to be, you know, sort of well over sort of 80% for November as a whole. Now, obviously, we've seen a huge amount of cancellations given the restrictions that have kicked in across the Central Belt and now with the England lockdown. But what's interesting is we are seeing people pick up bookings from within the Highlands and from within those areas that can travel. And, you know, confidence is, and you said it, confidence is absolutely key. One of the things that I think really dents confidence is a constant change in strategy. And that's, I think, doing everyone's heads in, because, you know, you're being told one week that this is what's going to happen next week. And then, you know, as soon as you get to that week, it seems to be changing all over again. I mean, you can't plan, you know, your next meal, let alone what's going to happen next week. And I think that's awful. You know, I think in terms of, I can understand why the First Minister is potentially thinking about taking a lockdown if it means, you know, we've got access to full furlough. But I think that the issue I have with that is that we should, an ask from me would be to make it optional, so business have the choice to use that rather than make it a blanket requirement. Because I think if we decide to lock everything down just because we've got a chance of accessing furlough, then the problem is you make the situation worse than you need to. And also, how do you ever then gain the confidence to open again? You know, you're going to be closed until there's some kind of medical intervention, because you're never going to have the confidence that you're going to have the business to carry on. So, you know, we would like to very much stay open, you know, whilst we can, and see what that tells us, because otherwise I think we're locked in a sort of complete permanent negative downward spiral.
I would say, Tanya, I mean, just coming back on that, it was yesterday in the call, you know, the unanimous view of everybody on the call that we should stick with what we've all signed up to in terms of the tier approach. It will get reviewed. Everybody's agreed with that. There's been consultation and effort gone in, and that knee-jerk reaction to change right now would be the wrong thing to do. So that was the message that went back. Clearly, you know, furlough is on the table for any business that wants to take it now, and they could choose to do it, as have a number of businesses already. But I do feel that, again, depending on the size of your business and where you are, if you're in a tier 3 or a tier 1, and depending on your overhead and the number of people, then, you know, different decisions will get taken by different people. It's great, obviously, to hear that you've got enough footfall coming in from within the areas. The last thing that there was a very clear message, and again, some of the conversation this morning was compliance. You know, there are a good number of businesses, unfortunately, who are still accepting bookings from people coming from out with the areas or tier 3 areas where the ask is that they don't. But if they're desperate for cash and it's not, it's only guidance, and businesses are choosing to do that, it's very difficult to inform to ask them to not do that. But we, you know, the clear message is, please, can we press the industry to be compliant and check that. And I think, you know, the evidence of cancellations and volumes of cancellations over the last few days is probably a good enough indicator that many people are complying, but there's concerns that some aren't, and where the good ones are giving up their guests to others. So, you know, for the bigger businesses, certainly Stephen is all for staying open, you know, and there's a large operator in the Central Belt, but, you know, he's seen his actual occupancy completely fall away over the last weekend, even in the self-catering product he has as well. You're on mute, Roddy.
Yeah. Thank you very much, Mark, and thank you, Tanya, for sharing your views with us. We're slightly over time, so I'm going to sort of draw a line, but I'd just like to thank Thomas, who's had to drop off the call, but he will send us his deck, which I will circulate. So thank you to Thomas and STR. Thank you very much to Mark for your contribution once again. Next week, we have Chris Tarrant of BVA BDRC, who will give us an update on consumer confidence and consumer behaviour. And we're being joined by Fergus Ewing, MSP, member of the Scottish Cabinet. So we should get a view from south of the border and a view north of the border as to what's happening and what lies ahead. But thank you again to all our contributors today. Thank you to Tanya, thank you Stuart Broster, and most particularly thank you Mark, and thank you to Thomas Emmanuel in absentia. To all of you, have a lovely week, and we'll look forward to seeing you at the slightly later time of 10:30 next week to fit in with Fergus Ewing. All the very best. Have a great week and stay safe. Thanks. Bye now.